Good morning, grade 11s. We are now going to be going through the cash budget of a sole trader. All right. You are required to complete task 10.5 and 10.6 for week 10. I will be sending you the template of the cash budget so that you are able to complete the following activities. All right, so I'm going to be working through the example. And once I'm done with the example, you are then going to complete those activities for week 10. All right, so let's read. The page number can be found on page 391. A cash budget focuses on the projected receipts and the projected payments, i.e. the future inflows and outflows of cash. The budget shows what the cash position of a business will be in the future, say 3 or 6 months hence. Estimations are made using existing data to forecast for the future. The necessary remedial measure must be undertaken. In this regard, decision makers are expected to take unexpected circumstances into account when drawing up a budget. Example, a drastic shift in the rand-dollar exchange rate may result in serious financial implications for businesses dealing with overseas suppliers. So with that being said, a cash budget is basically estimating your future incomes and future payments. And obviously for those unforeseen circumstances that you are able to pay off your short-term, long-term payments and estimate those receipts. So let's go through this. Example, we are required to prepare the cash budget for 3-month period, October to December. The information they give us below was extracted from the records of Sirloin Cash Butchery. The business sells for cash only. Alright, cash sales 120, cost of sales 60,000, rent income 12,400, salaries 20,000, advertising 2,600, depreciation is 15,600, 2,000 rand for sundry and cash expenses, interest on loan 200, and our cash drawings is 4,000. Alright, so now you know it always gets juicy when we get to the adjustments or the additional information. They told us that the owner intends on increasing his monthly drawings to 4,500 rand per month with effect from the 1st of October 20.8. So now you know that drawings will be a expense. So this is the very same format that I will be sending you. And you have to write down the receipts, which is your incomes, and then your payments, which is your payments. Alright, so here we have cash drawings. They told us that the cash drawings over here was 4,000 rand, but with this adjustment they told us that the owner intends increasing his monthly drawings to 4,500 per month with effect from the 1st of October. So now remember, we are doing the budget for 3 months from the 1st of October to November. So on the 1st of October, we know that there will be an increase of 4,500. It has now changed from 4,000 to 4,500. And we place it in the month of October, in the month of November, as well as December until they say any more changes is due. If we tally those 3 columns up, we should get a total of 13,500 over there. Let's do the next one. The loan balance of 20,000 will be repaid in full on the 1st of December 20.8. Now I'm looking for the loan. They told us that we're going to be paying the loan. Let's go see what our loan is like. Cash costs. Okay, they didn't give it to us here. Okay, they gave it to us here. The loan of 20,000 rand will be paid in full on the 1st of December. So forget about October because we're not going to be paying it in October. Forget about November. We're not paying it in November. We are paying that full amount in December only, and that is why I'm placing the 20,000 in December. And then I'll total it up in the total column, 20,000. Okay. Bonuses are paid to staff on the 31st of December each year. In 20.8, bonuses amounting to 30,000 Rand are expected to be paid. There will be no change in the monthly salaries over the budgeted period. Alright, so bonuses are paid on the 31st of December. Alright. So let us just reread that. Bonuses are paid to staff on the 31st of December each year. In 20.8, bonuses amounting to 30,000 are expected to be paid. There will be no change in the monthly salaries over the budgeted period. So if we have a look at our salaries and wages, it is 20,000 and there is no change. So here we have salaries and wages, 20,000 Rand in October, 20,000 Rand in November. But remember, how did I get this 50,000? It is the 20,000 ordinary salaries and wages that we get per month, and we are now adding the extra 30,000 Rand bonus, which in total gives us the 50,000 which I have over here. Okay, moving along. Sales are expected to increase by 10% in October and a further 10% in November. Yes. In December 20.8, sales are expected to increase by 30% on the November. Alright, so let's have a look at our sales. We have cash sales of 120,000. And then they tell us that it is expected to increase by 10% in October. So I'm going to multiply this by 10%. Okay. It's going to increase by 12,000 Rand. And that should be 132,000 in October, which we have over there, 132,000 at sales. Let's do the calculation for November. They told us that and a further 10% in November, so we're working from 132,000 times 10%. 13,200, and we should get 145,200, which we have over here. And then what do they say about December? December sales are expected to increase by 30% on the November sales. So you're working from the November sale amount, which is going to be 145,200 times 30%. And I get 43,560, which gives me a total of 188,760. And there we have it, 188,760. And again, you're going to total up your column to get the total amount for sales. And sales is obviously an income to the business. That is why it's put under receipts. Number 5, a markup of 100% is maintained. In December, the markup will be reduced by 20%. Okay, so a markup of 100% is maintained, and then in December 20.8, the markup will be reduced by 20%. Okay. So now remember, when we're putting up a markup, we're worried about our cost of sales. We can only put a markup on our cost prices in order to get our selling price. So the cost of sales for September was 60,000 Rand. was 60,000 Rand, but in this case we are going to be working back from our selling price. Okay, again, remember, how do you work out your cost price? It's going to be cost price equals selling price times 100 over 100 plus the markup. So let us work out for the month of October. The selling price that we got here from our sales was 132,000. 132,000, and they said to us that they have a markup of 100%, it's maintained, but in December it's reduced by 20. So this is going to be 100 over 200. And then your answer should be 61,000. Where are we going to put that? We're going to put it in cash purchases of trading stock, and there's my 61,000. Again, you're going to take your selling price over there of 145,200. It's November. 145,200 times 100 over the 200, and you should get the value of 72,600 Rand, and that will be your cost of sales for November. Cash purchases of trading stock 72,600. In December, the markup is reduced by 20%, so our markup is 100%, and I'm going to be subtracting the 20%. What is my markup now? My markup is 80%. So now, remembering, our cost price equals selling price times 100 over 100 plus our markup. So in this case, our selling price from December is 188,760. 188,760 times 100 over 180, and the cost price that we're getting from there will be 104,867, and you're going to take it to your cash purchases, and there's our amount. Okay, trading stock sold each month is replenished in the same month. Okay, so what does that mean? They're basically telling you that all the stock that you purchase for the month is sold within the month. All right, let's move along. 8. An additional amount of 2,000 will be spent on advertising during December 20.8. So now I'm going to look, how much have I spent on advertising in the previous months? 2,600. So here's advertising. It will be 2,600 in October, 2,600 in November, but they told us that it's going to, an additional amount of 2,000 will be spent on advertising during December. So again, we'll take the 2,600 plus 2,000 in December, which will give us 4,600, and that I have there. The reason why advertising will be increasing in December, because it's the festive season. You're advertising your presents for Christmas, food, and so on. Next one, sundry and other cash expenses are expected to increase by 2% per month. So our sundry and cash expenses was 2,000 in September, so it's going to be increasing by 2% every month. Okay, 2,000 times 2%, so that's going to be 2,040 in October. Then I'm going to say 2,040 times 2% in order to get November, which will give us 2,081, and then 2,081 for December times 2% will give me the 2,123 Rand. Okay. Depreciation is calculated at 15% per annum on cost. No movements in fixed tangible assets are expected during the budget period. Now, I just want to bring something to your attention. We are working out a cash budget, and depreciation is a cashless expense. So you will never ever find depreciation in a cash budget. Please remember that. So that will just be there to confuse you if you're only working out the cash budget. Moving forward, as we move along with the module, we'll get a projected income statement where we will account for depreciation. But for your information, cash budgets do not take depreciation into account because it is a cashless expense. Rent is increased annually by 15% on the 1st of January each year. And they told us that our rent income is 2,400. It's only going to increase in January next year, so our rent income will remain 2,400 in our budgeted period. Okay. Then we have the cold rooms will be upgraded during December 20.8. The expected cost is 49,950. So that is a payment for us. So when did we allow this renovation to take place? In December, and that's when we will make that payment, which is 49,950. All right. And that's why it's only in December. Last point, your interest on loan. Don't forget your interest on loan. Interest on your loan is 200 Rand. So here's our loan, 200 Rand each month, 200 Rand each month. Reason why there is no interest in December is because we paid our loan in full. So we're no longer paying interest on our loan. So now that we have all those details written down, we can now work out if we have a cash surplus or a cash deficit. So we'll total up the columns. So 32 plus 2,400 will give us 134,400. You'll do the same for November to get your total of your receipts, and December as well as your total, which will give you A. All right. Then your payments, you'll do the very same thing. Tally up all your payments for the month of October, November, and December, as well as your total, and that will give you B. You will see at cash surplus or shortfall, you need to take A minus B. So for the month of October, we had 132,400, and you're going to subtract the 90,340, which will give us a total of 44,060. This is the total that we have, and you'll do the very same for November and December as well as your total. All right. And then taking into account your bank, they will always give you the information. The opening bank balance on the 1st of October is 12,400, and it's in a favorable balance, meaning it's a positive. So you're going to take your surplus that you have for the month, and you're going to add your favorable balance of 12,400, which will give you a closing balance of 56,460. Now remember, your opening balance for the next month will be your closing balance of the previous month. So our closing balance for October will be the opening balance for November. The closing balance for the month of November will be your opening balance for December. And that's how it will work. Thank you, grade 11s. Please complete 10.5 and 10.6.